Okay, now I'm hoping everybody has this page in front of them, which is the presentation overview. What we're going to do is we'll just go through these major topics here about inexperienced tax preparers, a little discipline, the easy way to do taxes and the hard way to do it. We'll talk to you about a couple of opportunities available for people that are on this webinar right now where they can save some money by using our services. And then, as Brian said, we're going to open it up to a full Q&A session, and that's where we're going to want to spend most of our time. So we're going to get through the presentation portion pretty quickly. But as Brian stated, if you have a question during the middle of when I'm in the process of going through some of these slides, please don't hesitate to open up that chat and get that question in queue, and we can start addressing them right at the very end. Okay, so that all said, let's get started here. What the biggest problem that most drivers face is they end up going somewhere, and I don't want to throw out any names, but some of the big box store tax preparation places, or even they go to Aunt Harriet or to their brother or somebody that doesn't have real solid knowledge of what your industry is all about. As an over-the-road driver, you are entitled to so much more in the form of deductions and expenses on the road than any other type of taxpayer out there like myself. I have nowhere near the type of deductions. I'm not entitled to the type of deductions that you are. And so you always want to make sure that if you don't use someone like us, make sure you find someone that is an expert. The problem is when you go into these places that cater to mostly just W-2, real easy type tax returns, you're going to find a part-time employee who only works during the season and probably only has knowledge of the software and probably has very light knowledge of the actual tax. And we always ask some questions when you're talking to your tax preparer. The very first question you should ask about is per diem. If they've never heard of per diem, the first thing you should do is get up and walk out, because per diem is by far the #1 issue of any over-the-road driver, which I'm sure everybody on this call today understands. The sad part is most tax preparers out there do not understand it, and if they pretend they do, they typically get it wrong. So always make sure you have an expert working with you, especially when it comes to calculating your per diem. The other kicker here is most tax preparers out there are not CPAs. CPA is, of course, a certified public accountant. Basically, they have a master's in accounting. What Trucker Tax Service brings to the table is a whole team of CPAs. A CPA, not only will one CPA be doing your taxes, it's actually a combination of at least a bare minimum of 2 CPAs will be looking at every single tax return. And that's another question you always want to ask when you're getting your taxes done, is the level of education the tax preparer that is completing your tax return has. And once again, I kind of touched on this already, but typically that tax preparer is not going to have an idea about the number of deductions. What we've heard over the years quite a bit actually is if the tax preparer does have an idea, like you bring in, $60,000 worth of fuel, a tax preparer is sometimes very reluctant to put that on a tax return, thinking that it's well too much in the form of expense and it's going to get flagged by the IRS, which is absolutely inaccurate. So we're just going to keep moving forward. If you have any questions through any of this, as we said at the end, we can ask about this. This is just a list of a portion of what you're entitled to as an over-the-road driver. We have on our website, we have this. We also have it on any of our tax organizers that we hand out to our clients, is a full list. The list that we hand out is over 100 items long, and that in itself is just a suggested list of deductions. You're entitled to, the basic rule is this, is if you purchased it while on the road or if you purchased it to go on the road with you, most likely it's a deduction. And we'll be able to walk through any of those questions with you. If you had something that you purchased which is a little bit obscure, not on the list, well, we'll be able to let you know if it is in fact a deduction. And most likely if you purchased it for your business, most likely it will be. Now, this is the biggest thing that most drivers fall into, is the disciplines of keeping care of your business, managing your business properly. When you are out on the road, do you check your tires on a regular basis? We all know the answer to that is an absolute yes. Do you have regular maintenance checks on your engine? Once again, of course you do. If not, if that truck doesn't run, neither do you. Do you check your load? Well, of course you do. You're not going to take off without a load that's balanced or tied down properly. Now, all of these things that you do on a regular basis, what about your finances? Do you actually check your finances on a daily, weekly, and a bare minimum monthly basis? If you answered no to any of that, you're doing yourself a disservice. You need to be on top of your finances just as you're on top of the maintenance of your truck. Now, two different things here, the easy way to do the taxes and the hard way to do your taxes. We have a list here, and I won't go through everything here, but basically we get a ton of drivers that come to us that have just taken all their receipts and just jammed them into a Kroger shopping bag or as we say here, a shoebox or something like that. And then they either ask their spouse to go through it or their sister or somebody else, or they have to come off the road and do it themselves and go through all of these receipts, hoping that they actually save every receipt throughout the year properly. And then they have to go back, and then sometimes it's well over a year's time frame that they're going back and looking at this receipt and trying to remember exactly what it was because it's faded or the coding on it from the truck stop, whatever, doesn't say exactly what it is. And so now they're well, what the heck did I buy back then for $60? You know, it's what you need to do is you just really need to capture those deductions every day would be the ideal. Now we're back over on the easy way to do this, and that's to capture your deductions once a day and at the very least monthly. The way you can do it daily is most of the folks on this call right now are going to be either TruckLogics or TruckerSphere clients, and you know that that's a daily application that you can go right on, just open it up your app and capture that expense or multiple expenses throughout the day real quickly. I mean, it would take you less than a minute just to boop, 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 put it in, take a picture of it if you need, a picture of the receipt, and now it's captured and you're done. It takes literally a minute a day to do that. The other thing, the monthly service, we actually have a service of that nature, which we do a monthly service where if you don't embrace technology, in which some don't, what you can do is we give you a sheet. You can literally just fill that out once a month using all those receipts and get it back into us, either faxing it to us or mailing it to us, or we do have an opportunity on our website where you can just get right on there and complete it once a month. What we really, really want to emphasize here is you must be doing it. You have to bare minimum monthly, and we really recommend the daily app because it's so much. It takes the pressure off of you. It's the start of the presentation there. The tagline is, you know, get rid of that headache. Well, that headache is always going to be there if you're not managing your receipts properly and managing those daily expenses. The other thing too here, going down that third line item there, if you do it once a month or once per day, when you send your tax man a report, it's going to be so much more organized, and you're going to have captured every expense that you're entitled to. So as it says there at the bottom, that there is no surprises. We've had so many drivers that have come to us that what we do is when we calculate your taxes and so forth, and we put a percentage of, like, fuel is a great example. Fuel is typically anywhere from 40 to 50% of your total revenue. Well, we've had drivers come in as low as 20%. Well, we're on the phone with them saying, what's going on? Too many drivers over the years have said, well, you know, I have my own authority and I buy my own fuel, and I just didn't manage my receipts properly. We had a driver last year that we put the numbers together. He literally ended up spending almost $5,000 more in tax than he actually owed. And the simple reason is because he didn't manage his receipts properly. You need to be capturing every expense every month and ideally every day. Now, this is for what we mentioned briefly as part of this webinar or seminar here. We're both offering a discount here Trucker Tax Service, if you guys come to us and you use the promo code, which is webinar/TTS, we're going to give you guys a $50 off a tax preparation. And all you need to do is there's a promo code right on the paperwork, and you can do it right off of our website or right off of the paper that we put in your hand, and all you do is write that in, and you're going to save yourself $50. What TruckLogics and TruckerSphere are doing is they're offering a 30-day free trial, and all you have to do is enter that same promo code, or that, not the same promo code, I'm sorry, the promo code that's there on the screen, which is tax time, and then they'll get you that 30-day free trial. We can discuss more of that at the end during the Q&A if you prefer. Now, that's really what we wanted to do. Is the last time we did this, we spent too much time talking and not enough time getting your questions in. So I did go through that pretty quickly, but what we're ready to do is start to get and receive any type of questions that you may have. And they don't only have to be tax related. Now we're hoping that most of them are, but if there's something, you know, for the TruckLogics side or express truck tax, you know, from the 2290s or fuel, anything along those lines, please feel free. So we're ready to start the question and answer period right now. Anyone with any kind of questions, please feel free to start submitting. And Brian?
I'm here. Let's see. I did see a couple of questions. Jim, do you see? Oh, here we go.
Oh,
I
was just going to ask
you here. Okay, we just have a question from Bogdan here. I am familiar with Bogdan myself. He just wanted to know the difference between TruckLogics and TruckerSphere. Bogdan is a TruckLogics user. Bogdan, the main difference between the two is you have to be an OIDA member to use TruckerSphere, and it gives you some updates that you don't get from TruckLogics that are OIDA related. So anything they have going on, big things they're pushing for, you can get updated directly through the program. TruckerSphere just keeps you more in touch with what they're doing as an organization, and that's really the main difference. You do have to be an OIDA member to even sign up for that. You have to have your number on hand, but if you have more questions about that later, we can certainly discuss. Okay. Also, Jim, we have questions piling in here. Let's get started. Let's see. We have a question from Cheryl. She wants to know what is involved in getting your own authority cost form. I actually have someone about to join me from our service, TSNA America. They actually assist in doing that. So as soon as she joins me, I'll have her come back and answer that question, Cheryl. Next, we have a question from Teresa for Jim. What is the per diem amount allowed? She wants to know.
The per diem amount allowed for like a daily basis is what I'm assuming she's asking. Right now, it just went up from $59 to $63 per day. So now what the IRS does, though, is once you complete a tax return, you complete what's called a Schedule 2106, and you actually qualify for 80% of that total. So this year, what you're looking at is $50.40 every day that you're on the road that you're going to be entitled to per diem. And now the way that works is that you must be in your truck sleeping for the night, or you don't have to actually be in your truck. You can actually have rented a motel room but you can't be like at a friend's house or family's home or something like that, because that would be a time off. But any time on the road, any night that you spend on the road, you're going to qualify for that for $63 per night per diem.
Awesome. Great answer, Jim. Okay, and Cheryl, no, I'm sorry, that was Teresa. Teresa, if you want further explanation on that, maybe we didn't answer that quite to your needs, just type it in again, or you can use the raise your hand feature again, guys. In that GoToMeeting panel, there is a little raise your hand option. So if you want to actually ask a question over the air, we can unmute you, and you can do that. So if you want a little more in-depth conversation about it. I do have my associate Amber here from TSNA. We did have a question regarding getting your own authority. So I'm going to let her cover that really quick.
Hi, this is Amber from TS in America. When you are going to get your own authority set up, there is a lot of different things to look at. From our standpoint, we have 3 different packages that you can choose from. Everything from a basic authority, which would be just obviously getting your motor carrier authority to be able to operate for hire, and then the things associated with that, like a VOC3, DOT number, things like that, to a complete authority, which would set you up to run fully on your own. And you can contact us for pricing. We would be happy to speak with you and get with you exactly what your company needs, and then from there we can formulate what the pricing would be for you.
Awesome, and that was a great question. Cheryl, we can get you TSNA's contact information after the webinar. Probably be best, and they can talk to you about that a little more in depth. Let me get back to Jim. We do have a question that is, what's the life year for a used truck and a life year for a used trailer? If you can elaborate on that, any Jim.
I'm assuming they're asking in the form of depreciation, I would guess. The IRS, typically it doesn't matter if it's used or brand new. The IRS normally puts a 3.5-year depreciation schedule attached to any asset of that caliber, of that cost. So now, that said, you can, working with someone like us, what we would do is assess your own individual tax situation and then determine if you want to take, like if the trailer wasn't as expensive and you want to just write that all off in 1 year, you do have the ability to do that. But what we're going to do is we're going to assess your full tax situation first to determine if that's the best way to move forward, because you don't want to take a full the advantage of a full asset if you don't have to. So, but typically what you do when you purchase a truck or when you purchase a trailer, normally it's on about a 3 to 3.5 year depreciation schedule.
Okay, awesome.
Okay, and by the way, Brian, what I wanted to do is jump in there is anybody that, if I don't answer it correctly or if you wanted to go into more detail on this, our phone number is right there on the screen on the left there, the 799-1099, actually starting with the 888. If you want to just call us, and I'd be happy to talk to anybody in more depth, but we're going to try to keep the answers pretty concise for this purpose.
Okay, awesome. Now we do have Teresa. She did raise her hand, so I'm going to try to unmute her and see if she wants to elaborate a little more on her question. Teresa, can you hear us?
I can hear you. Can you hear me?
We sure can.
Yeah.
Okay. So my husband is a regional driver, so he's home every night. So would the per diem not qualify for him?
Per diem does not qualify if he is sleeping in his own bed each night.
Okay, so as far as what he's eating on the road every day, I would have to like itemize that, or would that not?
No, actually, unfortunately, he doesn't even qualify for a deduction in that respect, or he cannot expense his food on the road. What the IRS, the way they look at that is that he has the ability to make his own lunch and take it with him, for instance. So he doesn't have the opportunity to take advantage of per diem because he's a local driver. Now,
okay, so only the runs he does where he is actually sleeping in his truck because they are far enough that he's gone 2 days, those are the only ones he would qualify for.
Very good, correct. I was just going to say, that said, it just depends, because a lot of our local guys, they end up spending the night on the road multiple times throughout a month. And so, yeah,
Right.
You want to make sure that you take full advantage of all of that. And what you do is you just make sure that any nights that, and this goes for anybody that's over the road, any nights that you're on the road, but just make sure you're keeping a log. You know, and most companies will do an electronic log, but what you want to do is you want to keep your own paper log, and it can be even in a little composition book or something like that. It doesn't have to be an official one, but just in case the IRS was ever to ask you, the problem is most trucking companies delete electronic logs after 6 months. So you just make sure he just keeps a log of it, because that, as I said, I mean, that's $50 a day every night that he's out there that you'll lose out on in the form of deductions.
Okay, thank you.
Mm-hmm.
All right, awesome question, Teresa. All right, let's get back. We have one from Pam. And Pam wants to know, can I watch this again later? My audio is not working. Absolutely, Pam. We'll actually send this out to you. We do record these, so we'll get you a copy of that. Okay, we have one from Shay. She would like TSNA's contact info. So we'll send that to you as well. As soon as it's over, I have you on the list here, so we'll send that to you. Okay. Okay, we have one from Camilla. I have had a driver request to be paid a 1099 where he pays all of his taxes. Can this be done?
Absolutely. In fact, now, if I'm understanding the question correctly, the driver works for you or drives your truck is what I'm assuming. If that's the case, that's an at-contract or at-will employee or a contractor. So that individual would receive a 1099. Now, if you're responsible for the expense, fuel, everything of the truck, and all he does is drive and receives either a per mile rate or a percentage of the loads, however you want to pay him, the answer is yes, you would pay him on a 1099. Now, that driver, even though he doesn't have any of the responsibility, any of the expense of the truck and so forth, he is still looked at via the IRS, he's still looked at as owning his own business because he is a 1099 employee. He needs to be talking to somebody like us to get his taxes done, because typically it's the contractors that get hit the hardest with taxes, because typically they make pretty good money, but they're not aware of the fact that they're not contributing any tax on that income that they're earning. So you need to have somebody like that contact us, and we would be able to walk him through any questions that he may have.
Absolutely. And I just want to add in here, if you use our service, TruckLogics or TruckerSphere, and you have a driver, it's very easy to keep up with what you're paying them. You can run a report on that at the end of the year, so you have a total. You have all those payments on file and ready to actually file that 1099 with someone like Jim. So just another reason to use our service. I'm going to get back to the questions. We have Cindy. Actual fuel purchase, the way our settlement comes is the fuel surcharge added and then charged back out.
Okay.
I think that was like half a question, honestly.
Okay, well, I think I understand what she's asking, though, because
okay.
we get faced with this all the time. Is what happens is you fuel up, well, you're going to get, you fuel up at one price, which is the gross price at that point, and then that fuel surcharge, which is the company, whoever that they drive for, will have an agreement with like pilots or loves out there, TAs, that they get a rebate back, and that's the surcharge coming back. Most companies give that surcharge back to the driver in the form of additional income, but some don't. If they don't give that surcharge back, then you do get to deduct the full price of the fuel up. But if they do give that surcharge back, actually what we would do is you do still take the full deduction of what that gross price was for that fuel up, and then you just take the surcharge and you add that. That would probably, most companies, like 99% of them, would add that as part of your income, and that would be part of your 1099 that you receive. So you would take full advantage of the fuel price, the full fuel price, but it kind of gets offset a little bit because your income does go up on your 1099 via the surcharge. Now, if there's any confusion there, you could call, and I'd be happy to walk you through a little bit better.
Awesome. Okay. We have a question from Colleen. She wants to know, can you go back and look at the past 2 years' taxes and see if there are any more discounts available? And is it possible to fix them after that, I guess.
Say that last little bit. Is it possible to?
To fix them, I help with
fix
getting
them.
truckers
Yes.
their own authority. Yeah.
Yes, yes, absolutely. In fact, it's what most of our off-season is spent doing, because we have a ton of new clients every year that come to us, and we like to call it the wow factor. They're like, whoa, how did you get us such great deal? You know, I paid so much more last year. Well, it's because we know what we're doing. And so what we do is we always go back and review the past tax returns. Well, not always, but a lot of times what we'll do is we'll go back and review the past few years. We did one here recently, a driver. Now, he was a company driver, but he came to us and he had a whopping refund, and he had no idea that, you know, what was available to him and so forth. We went back and did his past 3 years for him. He ended up putting $1,500 additional dollars in his pocket each year. So he was a pretty happy camper, because he ended up with $4,500 additional dollars that he never expected. And what we can do is, as an owner-operator or lease operator, we do the same thing, and we find huge, huge holes that other tax preparers have not taken advantage of, where we can take the tax liability that may have already been paid, and if you have, say you paid in $10,000 in taxes, but you really only owed $5,000, well, the IRS owes that back to you in the form of a refund. And we do it all the time. In fact, it's a very, very smart move to have your last several years reviewed.
Awesome. Okay. We have Romero. He wants you to go over the per diem again. He's a regional driver, and he's home every night. Food does not qualify for per diem, he's asking.
Correct. Unfortunately, as a regional driver, well, it doesn't really matter. I shouldn't use the term regional, because there's a bunch of regional drivers that end up spending the night in the truck, like they're out 4 nights a week and they're back home on Friday night and they're home for the weekend. They definitely qualify for per diem for those 4 nights that they're in the truck. If you don't spend the night on the road in your truck or in a motel, I mean, we do a lot of hot shots, guys that drive vans and so forth, where they just sleep in their front seat kind of thing. They still qualify for per diem. But if you come home and your head hits your pillow in your home each night, unfortunately, you don't qualify for anything in the form of per diem. Other expenses that you may have out there, like, I don't know, if you're buying something for the truck, something that, you know, I don't know, air freshener or Sirius XM or CB radio, any of that, yes, that is deductible, but per diem, unfortunately, is not if you don't spend the night on the road.
Okay. Looks like Ramiro also raised his hand, so I'm going to try to unmute him to see if he wants to elaborate any more on that. Ramiro, you're on the air.
Yeah, that was not exactly my question.
Okay.
I'm not an actual driver, but rather I assist multiple truckers in Kansas with some of the ins and outs of handling the business. So the question was regarding the per diem is because I come in late into the presentation. So as, most of the companies that I work with, they have the drivers that are over the road, and they work as employees. So how do these companies, what is the deduction basically for drivers' meals and lodging expenses that the company pays for the drivers?
Okay, if you're saying that the company pays for the drivers?
Yeah, the drivers are employees, and basically the company is paying the lodging expenses, including meals, depending whether or not they're layover or not.
Okay, and I'm thinking I understand what you're saying. That as a company driver, a lot of companies out there, big percentage of the companies out there, will pay per diem to a driver. There's 2 different types of per diem. There's a per diem that you can get as an additional part of your income, and then there's a per diem deduction that you get to deduct from your taxes as a big expense. The per diem that's paid to the driver, it's up to the discretion of the company how much they want to pay them. Some of them get as high as $50 a day per diem while they're on the road. Now this doesn't go for lodging. This is typically the over-the-road driver that's sleeping in his truck could get upwards of $50 a day. Well, that $50 a day has to be put as part of the driver's income. It hasn't been taxed. It's a benefit to the company to pay them per diem as part of their pay because they don't have to pay payroll tax. They don't have to assume payroll tax on that per diem. So if a driver's out on the road 300 days a year and he's receiving $50 each night that he's out there, that's an additional $15,000 of income the company didn't have to pay tax on. Now, there's one of two ways that you can go about that is you can either not claim the per diem, which it's okay. You don't have to claim that per diem if it's not on the W-2, but normally it's to your benefit to claim the per diem and then claim the per diem deduction as well, because then there's hundreds of other expenses that you get to include along with the per diem that'll easily offset. And I don't know if I've confused you completely now, but the bottom line is a driver that receives per diem is going to have to record that as additional income, and he certainly should be recording his per diem deduction as well. Did I make that about as clear as mud?
Not really. You didn't address the concern. The company has already paid for the meals and the lodging via a debit card that the driver carries with him. There is a company debit card. So how are those expenses fully deductible?
No,
not necessarily the company paying a per diem to the driver.
Okay.
But rather is allowing the driver to go ahead and expend out of the company's account.
Yeah, so the driver is given like a debit card that he can use while on the road for his meals and so forth and lodging. Right?
Yes, in some instances, not on a day-to-day basis, but only to pay for his meals and lodging when the driver is overlaid.
Okay, in that situation then, it just kind of breaks even. I mean, he doesn't get to deduct any of that expense because it's not money out of his pocket, and he doesn't get to claim per diem either because the company is paying for that, the cost of him being out there on the road. If they've issued him a debit card, he just basically he's the same equivalent as a local driver in that respect.
I think you still not understand my question. It's not whether or not the driver can deduct it or not. It's how is that deductible to the company?
Oh, to the company. I'm sorry. Well, the company, it would just be an expense. What they're doing is that debit card that they've issued to them, I mean, any expense that driver puts across that debit card would become a full expense to the company that the company is entitled to deduct.
Okay, so it's a fully deductible then to the company.
Yeah, it's kind of, absolutely, to answer your question. And the second thing is it's kind of like per diem that is paid to drivers. There's a bunch of company drivers out there, big percentage of them, that get per diem, but it never hits their W-2. The company just writes it off as expense. Like if they pay that driver that $50 a day, that's pretty high. It's typically not that high, but say $25 a day, so that driver had $7,500 worth of per diem paid to him. Well, the company just writes it off as an expense of having that driver on the road. So it's the same concept of giving them the debit card.
Okay, so that's understood from the company standpoint. Now, from the driver's standpoint, because he's not paid on a 1099, he's actually a W-2 employee.
W-2.
And what about then, like his meal expenses that he spend while on the road?
If he uses a company debit card to purchase his meals, he has no expenses. He can't write off anything. If
No,
he is
I
just
understand that.
not on the
I
road,
understand that.
okay,
But
if he's not on the road and it's a
uses his own funds to go ahead and pay for his meals
okay,
while on the road, not being overlaid.
okay, if he's using his own funds, using money out of his own pocket, and he's spending the night on the road, then he can write off per diem. He gets nightly per diem, which is, it was $59 and it just jumped to $63 a day now. But he
Okay.
has to be over the road. He can't be coming home and sleeping in his own bed at night. If he does that, per diem is not available to him.
So the per diem is only for those days that he's over the road.
Correct. And make sure that you understand what over the road means. I mean, he could drive, 400 miles down the road, get to a yard and have to spend the night in the truck. That's fine. He doesn't have to be going from state to state or across the country. Just as long as he's spending the night in the truck, that's considered over the road.
In the truck or at a hotel?
Or a hotel, correct.
Okay.
Yeah.
Yeah,
because there's a bunch of drivers out there that don't have
answers
sleep.
my question. So the driver can, in addition to the company basically writing off the expenses that the company makes, the driver, the expenses that he makes while out there on the road, what you're saying is then can still deduct the per diem even as an employee.
Very much so, correct. In fact, you typically want to do per diem because it's, the thousands and thousands of drivers that we've done over the years, we've never had a driver that'll spend more in food costs than what per diem gives them. So it's a bigger bang for your buck to go with per diem instead of saving up all of your food receipts and adding all those up.
Okay, so it's pretty good advice for me to give to the company drivers then, making sure that they take advantage.
We got a question from Timothy. He just wants a copy of this webinar too. Timothy, we will get that over to you. Okay. Camilla again wants to know, did you just say that food is not deductible if not out on the road but at home overnight? Wouldn't food bought while on the road during the day be deductible? Isn't that a meal deduction?
Not in the eyes of the IRS, no. You cannot deduct food that you've just purchased during the day. It'd be like a person that works anywhere from, an office to a construction yard going out and buying lunch during the day and writing that off. You're not allowed to. Now, if you're over the road and you're spending the night on the road, that's when the IRS gives you the ability to deduct it. Unfortunately, as an over-the-road driver, and that's the biggest issue by far, is we have a ton of drivers that will call us and say, hey, I'm on the road 14 hours a day driving my regional route, going out and coming back. Can I write off the food that I purchased during that day? And unfortunately, the IRS does not allow it. It's just, it's doesn't seem fair, but it's the way the law is written.
Awesome. Okay. We have a question from Ali. I'm a carrier. I share a truck with one of my contractors. Can I give him a 1099 and K-1?
Yes, on the 1099 and probably on the K-1. It just depends. If your business is incorporated, then the K-1 would be issued, actually specifically an S-Corp, because then what you do is he'd have to be a member of that S-Corp in order to receive that K-1. And if you have further questions on that, you could give me a call and we could walk through it. But 1099 definitely, and then the Corp, if you are an S-Corp, then he would automatically, when we complete a corporate return like that, whoever is a member of that S-Corp, they share the net profit or the net revenue of the company, and whoever, depending on their ownership percentage of that S-Corp, that's what the K-1 would be issued with. So,
okay.
I'm sorry, go ahead, Brian.
I was going to go on to the next question. Do you have anything else to elaborate?
No, go ahead.
Okay. Cindy did type her question in. We couldn't get her on the air earlier. If fuel surcharge is added into your revenue on your settlement, can it be deducted as an expense along with actual fuel purchase? The way our settlement comes is the fuel surcharge is added in and then charged back out.
Yeah, typically, well, it just depends. Yeah, what you want to do then in that respect is most likely the 1099 that the company issues you at the end of the year is going to include that fuel surcharge because that's additional income that's coming back to you like via your settlement statement. So yes, you do want to take full advantage or the full price of that fuel purchase. You don't want to take it less the fuel surcharge. You want to take the full price because that fuel surcharge has already come back to you in the form of additional income that you're going to pay tax on. So you want to offset that fuel surcharge with the full purchase price of the fuel.
Awesome. Okay. Next question is from Tomas. I'm a single owner and employee of a brokerage. What is the best way to get health coverage deductions, purchase a plan for my person as an individual, and have the business reimburse me or purchase it through the business? I have also read that the IRS has prohibited from reimbursing employees for individual health premiums. Please advise. Thank you.
Oh boy. There's one question that's going to be probably out of my realm. They're getting into healthcare questions and so forth, especially this day and age, is pretty dangerous territory. But normally, I mean, if the company can purchase you health care and then write that off as a line item of, like one of your insurance things, just as if you're buying truck insurance and so forth. How that all, I mean, from an expense standpoint, I don't know how that would work with the new Obamacare and all that, if they would allow, a company to pay for that, because I think the whole idea behind going and finding yourself health care when you go on the exchange and so forth, they want to see that it's an individual that's not earning very much money and they get incentives back to you and so forth, and it's very complicated. But if the company did purchase that health care, then yes, it would be an expense item for you.
Okay.
And by the way, and wait here, Brian, real quick, and also any money out of pocket that you spend yourself on health care is definitely going to be deducted. It's not a business expense, but it is a personal expense, and it would come off from your personal side when we complete your personal 1040 for you.
Okay. We have a question from Lisa. Can a TRAK, T-R-A-K lease be fully written off as an operating expense? If so, what happens at the end with the residual value? For example, a $100,000 truck on a 5-year TL with a $20,000 RV at the end. Does that RV of $20,000 become a capital purchase and depreciated over 3 years? Isn't there a particular amount of separate questions? Sorry, that was it.
Okay, wow. You're going to have to help me with that one again, Brian. Read that again.
Sure. Can a TRAK lease be fully written off as an operating expense?
A truck lease is what she means, but go ahead.
Okay. If so, what happens at the end with the residual value? And she gives the example, a $100,000 truck on a 5-year.
Okay, now I'm with you. Now, because you know what, the track thing at the start is what threw me. Okay. Yeah, a truck lease, the way that works is you don't have depreciation available to you because you don't own the note. So what you do have available to you is that full lease payment, and you write that off month in and month out, or if you have a whatever it is, $1,500 a month payment. At the end of the year, you're going to have $18,000 worth of truck lease that you can write off against your taxes. Now, at the end of that truck, where it's like a purchase, or if it's at the end of the lease, you now own that truck, and that truck is worth $20,000 at the end. Now, I don't know if you're actually purchasing the truck at that time, or if you just assume that asset, that $20,000. Wow. I think I understand what you're asking. Can you write off that $20,000 in the form of depreciation? And I believe the answer at that point is no, but this is why we have CPAs on staff that have the big brains that could answer that question for you. So if you had that question, you wanted to come to us, I could get you handed off to one of our CPAs to answer that question, but my gut tells me no, that you wouldn't be able to double dip because you've already taken the full, like if it was a 3-year plan and you've taken, that $18,000 at 3 years, so you've written off $54,000 worth of payments, the IRS is not going to allow you to go ahead and write off an additional 20 because there's still that much value in the truck. Now, that said, if you refinance the truck and took that 20,000 whatever out of it, or you needed to put a new motor in it or something like that, then yes, you're going to be able to depreciate that.
Awesome. Okay. Next question is from Timothy. Do I have to file income tax in other states I drive other than my home state?
No, you should not. It's happened pretty rarely, but as long as you just live in one state, that's the state that you owe taxes in. So you live in Texas, you pay tax. Well, Texas isn't a good example because there's no state tax there. If you live in Indiana, you pay state tax for Indiana, and that's it. It doesn't matter if you traveled 48 additional states, as long as your company paid you. Actually, there's a lot of companies out there that won't deduct state tax because they don't want to go through the hassle of knowing the tax in an additional state. We'll do that for you, and we would file it for you in the state that you live.
Okay. We have another question here from Kenneth. If I go out, can I claim any part of my house bills, internet, electric, etc.?
Yes, you can. Technically, if what you do, have an office inside your home that you use, for business purposes, the IRS says that you can deduct whatever the size of that office is in relation to the rest of your home. So if you had a 2,000 square foot home and the office is 400 square feet, so that means that what you have is 20% of your home is your office. Well, you can write off 20% of your mortgage, 20% of your electric bill, internet, and so forth. So that's the way the IRS works. And well, if they ever audited you, they may want to actually see that office and make sure that it is truly 20% of your home. But that's what you're entitled to, is whatever the percentage is, the size of that office to the size of your home.
Great. Okay. Now, we do have Tommy here who did type in his question. Again, anyone who, if you raise your hand and we unmute you, and for whatever reason we're having a few people with audio problems, do use the chat box in the GoToMeeting panel and type that question in. That's what Tommy did here. So Tommy wants to know, isn't there a partial per diem amount that can be claimed?
There is a partial per diem, and the way a partial per diem works is if you're on the road, say you leave on a Monday morning, you drive, and then you come back late on Friday. Well, what the IRS says is you'll get Monday night, Tuesday night, Wednesday night, and Thursday night as full per diem, and then Friday, as you come home, you get a partial day, which is 75% of per diem. So in this case, it would be, instead of the 63, what you're looking at would be, $47.25 for that day. That last day, that when your head actually ends up in your own pillow, that night, that day you'd get a 75%.
Great. Okay. We did miss a question from Shay earlier. If I have a car that is being driven by a company officer, can the payment be made through my business account, or should the payments be made to the officer?
It sounds to me like the company owns the car, but the officer is driving it. Is that what you're getting out of that, Brian?
Yes.
Okay, if that's the case, then the company can certainly make the payments. They don't have to pay the officer and then have him make those payments. No, the company could certainly make it. It's a company car then, and he could even issue the driver a company fuel card or a debit card or whatever to use to, purchase all the fuel and so forth, and get full write-off there as well. If it's 100% use for, that's issued to that officer as a, company car, business transportation, absolutely the company can pay for it.
Great. Okay. And Shay also wanted TSNA's information. We'll get that out to you, Shay. Let's see here. Okay. I think that's all we have at the moment. So if we haven't answered your question, A lot came in at one time, so go ahead and send it again. Okay, so that's all for the moment. Again, last chance. Use that chat box to send your questions over, or again, you can still raise your hand and we can try to unmute you. Just to review, everything we offer. Trucker Tax Service is offering you guys a $50 off promotion here if you use their code that's on the screen for attending this webinar. Also, TruckLogics and TruckerSphere, if you're not familiar with that or you haven't tried that yet, it is completely free to try. You just got to use this promo code TAXTIME. We're going to give you 30 days free. There's no credit card, included in that. You can just try it completely free, no strings attached for a month. Again, it's a great way, even right from your mobile phone. We have an app. You can keep up with all of your expenses, get a nice profit and loss that you can use, especially come this time of year, to have all that stuff organized.
And by the way, just before we sign off here, if anybody has any questions, you can go on our website, which is the www.truckertaxservice.com, click under Contact, and what you can do is you can just put your name and phone number or email there and a little message asking a question, and we'd be able to address it that way as well if we didn't get it answered properly for you during this webinar.
Okay. We did get a couple more questions here. Okay, from Terry, what's the life year for a used truck and the life year for a used trailer?
Once again, it's not really anything engraved in stone, but typically any truck that is purchased, or any trailer in that matter, trailers sometimes not as long, but trucks are typically depreciated over a 3 to 3.5 year period. That's a depreciation schedule set out by the IRS. Used truck or used truck. Oh, I'm sorry, did I say that right? Used truck or new, correct. And it goes for trailers as well.
Okay, and we did get Philip. He did send his question over via chat. I live in New Hampshire. I paid federal tax. New Hampshire doesn't have state tax, but I lease to a company based in California. California owes them the state tax. Did that make any sense to you, Jim?
Yeah, read through that again, please.
Okay, I live in New Hampshire. I paid federal tax to New Hampshire. I guess New Hampshire doesn't have state tax, but he leases to a company that appears to be based in California, and then it says California Day. I guess California says I owe them state tax. That's why I was getting that. Because the company is based in California.
Yeah, it happens all the time that the state, because the company that paid you probably filed you as living in California and probably filed state taxes or removed California state tax from your income. What we would do is we go in, we take it back from the state of California, because you don't owe tax to the state of California. You don't live in California. You live in New Hampshire, so that's where your taxes belong, and we pull it out and do it there. I don't remember New Hampshire being a non-taxable state, but anyway, the like if you lived in Texas, for instance, we would just pull all that. If you did pay in state tax to a state you don't live in, you get all that tax back, and then we determine where to pay that tax. And if you live in a state that doesn't have state tax, you just get all that tax back in the form of a refund. And a lot of states get upset about that, but it's the law. They don't deserve that tax. You don't live in their state.
Great. Okay. We got another question from Lisa. What are the top 2 to 3 tax deductions that most people are not aware of or don't take advantage of? Great question.
Wow, that is a good question. Well, per diem is definitely the number one, always the number one issue. If they don't take advantage of it, which a lot of, especially company drivers, don't take advantage of it, if it's calculated, it's typically calculated wrong. So per diem is by far the number one. Number two, I don't know. I mean, there's so many out there that things like, cell phones. People think, well, hey, I have a cell phone no matter what. Well, guess what? You get to write it off, a big percentage of it, because you're an over-the-road driver. You need that cell phone. That's your lifeblood to be talking to dispatch or whoever you may be dealing with business-wise, and you do get to write off a percentage of that cell phone bill depending on how much time you spend on it for business and how much on personal. So that's one big one. Another, I don't know, boy, there's so many that, laundry is another one. That because you throw, quarters in, you spend $5 worth of quarters, well, you don't have receipts. Well, guess what? You're still entitled to that as an expense. So you want to make, just kind of keep a paper log of it. Hey, spent $5.25 today on laundry. Things like that. There's literally hundreds that drivers don't take advantage of. And I'm sorry, I don't, right off the top of my head, can't think of ones that would be more prevalent than another, but unfortunately there's dozens that most drivers miss out on.
Great, okay. That is all the questions I see right now. We'll do a last call. And I do have Amber still here with me from PSNA, so I'll let her talk just a little bit about what they do. We've had a couple people ask for their information, so I want to give her the chance just to explain what they do a little bit if anyone has any more questions regarding their services.
Okay, so Truck Services of North America is a full service provider. We are a premier processing agent, and so we handle everything from IFTA and IRP. Those are setting up the account, to the quarterly taxes that you're required to file for IFTA. And then we also do things like authority and temporary permits. We do a whole gamut of things up there. So if you are interested in us handling your quarterly IFTA or setting up any of your accounts, we would be happy to speak with you. Our phone number is 803-386-0320. And we would be happy to speak with you if you want to just give us a call. We'll talk with you, see what would work best with you, and then we'll be happy to provide those services for you. Again, our phone number is 803-386-0320.
Awesome. Thank you, Amber. We're going to have just a couple more questions here, and then we're going to call it a day. Again, we'll get anyone who wanted TSNA's information, we're going to send that out to you. Trucker Tax Service and TruckLogics, Trucker Sphere contact details are here on this page. So feel free to reach out to any of us after this. We all work together and would love to help you in any way we can. I think we have just about everything covered as far as solutions go. I think TSNA does just about everything Jim and Trucker Tax Service doesn't offer, and we offer. TruckLogics and Trucker Sphere are great technology solution to help manage your day-to-day business. So just a couple more questions. We have one from Mike. Let's see here. Should you deduct the fuel surcharge from your gross 1099 income and deduct it separately on your tax?
Fuel surcharge is not a deduction. It's actually income that would bring up your income. Surcharge is money that you get back in the form of income. So you're not deducting it. What you are deducting is the cost of the fuel. Because that fuel, if that fuel surcharge was added to it, what you want to do is if you went in and the price of fuel was $2, well, with the discount that they get, suddenly it's only $1.95. Well, you get that 5 cents back in the form of fuel surcharge. Well, what you're deducting is not the $1.95 for each gallon. You're deducting the $2 per gallon price because that surcharge has come back to you in the form of income, so you're deducting the full price of the fuel.
Okay, excellent. And we're going to make this the last question here. It's from Timothy. I live in Minnesota, and my most driven states are Minnesota, looks like Iowa, Wisconsin, and North Dakota. Why does my CPA filing in those does my CPA filing in those states just because I drive there a lot?
It's a very common mistake that they do because you drive into those states, and a lot of CPAs or tax preparers out there that don't have the knowledge, because you're actually spending the night in that state. Like if you go into Iowa and you spend, I don't know, 100 nights in Iowa because of your job, well, they think that you owe all that money that you earned in Iowa to the state of Iowa, and it's not correct. Your CPA is filing that improperly. You should only be filing in the state of Minnesota. I think you said he's based in Minnesota, correct? So if that's the case, that's where all the tax belongs, is to Minnesota. You should only have one state tax return. You should not have multiple. The only time we file multiple state tax returns is if the driver has physically moved during the year and he's moved from one state to another. That's when you file two different state tax returns. But if you have never moved, all you do is just spend a lot of time working in that other state. You don't live in that state. You live in Minnesota. That's where the taxes belong.
Awesome. Well, we had a lot of great questions today. This was a really insightful webinar. I even learned a few things. Thanks, Jen. But again, just want to thank everybody for coming today. Any further questions you have after this, again, you can reach out to Trucker Tax Service, TruckLogics, Trucker Sphere, Truck Services in North America, whatever you need. But again, thanks for coming. I'm going to let Jim wrap it up.
Well, I don't know how much more I have to say other than what you just said, but thank you very much, everybody, and I agree with Brian. Very good questions. And as I stated multiple times, if I did not answer the question correctly, multiple ways you can do this. You can get on our website and just go through contact and send us a note that way, or you can dial our toll-free number, which is 888-799-1099, and we'd be happy to address any questions there. Or better yet, what we could do is get you out one of our tax organizers too, and they're very self-explanatory, but it would help you with that whole tax process, and we're open to address any questions that you may have as you're completing one of those organizers as well.
Awesome. Well, we are over and out. Thanks, everyone, and have a great day.
Thank you very much.